Welcome back. It's Merritt with S&B Futures. What a day. Nothing crazy, but just quality movement. Not a day. Many of you probably licking your chops waiting for this day. Not a day where we nailed Hypo 1. We did not, just kind of predict the high and low and really crush it here today. But this is important to show. In fact, I would say I've probably been on something of a hot streak in terms of really nailing, Hypo 1 or 2 and the likely destinations and you name it. So this is real life. Nothing about these videos that we're doing is sugar-coated, meant to put me in some favorable light. That is absolutely not what we're doing. So let's dive into it. We'll take a look at crude oil and the S&P. Crude oil first. As we came into the open today, reversal from destination area into low of day yesterday. That's first and foremost. So that's important. We did nail it yesterday. Expected move down into 51.20. We got a few ticks shy of there and then reversed. And that led us into what we're doing today, which in hindsight, I think was a good factor, even as I forget who it was, Thomas, I believe, in the room, had pointed out kind of a hold overnight back into a specific zone. And so I think my Hypo 1 was a little bit off there. I actually had a mild uneasiness with it as I put it up, and sure enough, it certainly wasn't the nailing the movement today. Very good level. It's a very good level, but I don't think the most likely thing. In hindsight now, I know it's tough, but I don't think Hypo 1 was as good as it could be today. And in fact, I'll sleep easy tonight knowing that a ton of my students put something more like my Hypo 2, even just a pure bullish scenario, as their Hypo 1s and 2s. So, the students becoming the teachers here. So that's fantastic. I love it. So the reversal off our low day yesterday was important. Hypo 1. We could bounce to the 52.50 to 70 zone, perhaps wick it due to the weak-looking overnight high, and then find sellers to push us back down to 51.80s. So here's Hypo 1 highlighted here. Let's put it on the price chart as well. So 52.50 to 70, thought we could wick that zone, find sellers. Get a bearish zone to take us down to 51.80 here. We'll just draw this line. Okay. So that obviously didn't happen. We drove right through that level off the open. Hypo 2 was for us to drive and hold that level, which we did, and push up to a pivotal moment at 53.30s. So we'll just keep the same red zone there because it's the same for Hypo 1 and 2. And then we'll highlight our 53.30. Okay. And just to read the actual text, or if it doesn't wick there and holds, then Hypo 2 is higher into 53.30 area to then find those same sellers. So in fact, let's just actually draw this as our secondary bearish zone. Oops. That didn't happen either, did it? Any hold beyond 53.30s would bring about some strong buying over the coming sessions, with targets of 55.12 for starters. So that's nearly a $2 target away from 53.30s. In general, this market had trouble leaving this general zone for nearly 2 months now. Hypo 3 would be for rotations inside 52.20 to 90 zone. It's certainly feasible as well. What is this? In fact, current. I guess I started to say something else and didn't. I have no idea what in fact current is there. Sorry about that. So you can see hypo 3 highlighted right here, where we expected rotation in this 5290 to 52 zone. And that's this blue area here in the chart. So we can just leave that there as hypo 3. Okay, so the stage is set. What happened? First of all, we blow through hypo 1 bearish zone. So the expectation is at that point in time, it's almost like hypos, when they're really well crafted, they give you a sense of what could happen. So very, very important here. Hypo 2 would be what we shift to within the back of our mind, hypo 3. So hypo 3 inflections right here, but certainly once we hold beyond there, that little bitty break and hold, order flow's looking nice and strong. The expectation is to move up there. So that brings about opportunities for little scalps and plays like that, if that's a part of your process and what you do. Then we begin to hold 5330s. In fact, we see some absorption on the tape as sellers really try and press it right here. Not happening. Passive buyer absorbing that. You can see that by the blocky looking price action at the lows. Order flow absolutely rips as these guys stop out. And it just continues to kind of accelerate there. That's what we expected, but that's kind of where that ends, as that was all she wrote. And in fact, the sellers come back with a vengeance. But still, I mean, we pop from 53.40s up to 53.90s. So a nice little 50-cent pop there. Beautiful opportunity to get involved with, that, hey, if we hold 53.30s, that's a real strong buying opportunity. Didn't pan out, had much higher targets in mind. So essentially, nothing I'd planned for today works to a T. So again, we see strong selling come back in. Nobody buying this thing on the retest. I had a couple students that took a scalp short there to revert back into this area. I had students that shorted once we began to hold back under the hypo 2 zone. So, give myself a little bit of a break here. You could say that this was one big wick through the hypo 2 53.30 area. It just got very volatile and really pushed considerably through it. And then now we're back into hypo 2 zone here, which is a bearish zone. So any of the students, I'm telling you, it does not matter. You could short this first little pullback. You could short this pullback. You could short this one. And as those of you that look at a footprint chart and monitor some shorter term references that we do, you did not want to mess with these highs right here. Did not want to mess with those. But then, nice little cleanup right there. That's where you get involved. Again, more opportunity there, more opportunity there. Just that's pretty much what you want to be going for at that point in time. Back into, for me, hypo 2 zone. Looking for shorts, looking for this thing to sell back off. Tried to get into VWAP there after the close, didn't do it. So a day where we don't have much anything as it relates to just nailing the market movement that day with our hypos. It happens. We can still find small opportunities in between hypos at times, as long as you're able to do that and not have it take you away from doing the right things, not have it get you so wrapped up into, taking a short when contextually you should be stalking along later on. And that ends up being what we call an opportunity cost. So very important there that you're able to compartmentalize between taking a scalp versus a real contextual play. All my students are aware of when they're taking a scalp versus when they're taking a real A-plus trade, as we would call it. So let's dive into ES. The overnight action simply rotational within the prior session balance, although some sign of life here into the open as it's peaking above that area, which, as you recall, is our 2642 big inflection. Hypo 1 is a break and hold above that line in the sand to run to 2657 or possibly into 2670s as a stretch target. Hypo 2 is a failure of that attempted break, snap back under our 42 line in the sand, move down to 25. Then watch that area for even further break and hold. This is the exact same hypos from yesterday. I double checked it and they are. And in fact, if we switch over to ES, you'll see that I don't even need to adjust I didn't adjust these drawings from yesterday. Exact same thing here. So hypo 1, this is the line in the sand. Hypo 1 is holding above there. We want to take longs up into this target area. Hypo 2 is if we're holding below here, we want to take shorts into this target area. So how did it play out? Interesting day here. We didn't really nail either one. It did not make it to either target on the upside or the downside, but it was a really good inflection. Even though we were above and below it, and ultimately there's probably some stop outs in there, the rotations were really nice in the S&P today. So, right off the open, as we mentioned, although some sign of life here into the open, it's peaking above that area, which is our line in the sand. So right before the open, we start holding above this line in the sand. So right here, you can get involved when you see the buying come in. You take a nice little, scale out. Let's say you're in from 42.50. You can scale out 48.50, 6 points. Great. Then maybe you stop out on the rest of it there if something's not quite right. An advanced play would be getting short here, but nothing's clear yet. We're above the level, we're below the level, we're above the level. Probably best to sit on your hands there, although this was an acceptable short for some more advanced students. But then we get a real understanding of what's going on. A slow, grindy move back up into retest the level. You start to see weakness from the tape. You start to see the sellers take control. Get involved there. Get involved on this little pullback there. Let me get this better. And then get involved here. Same trade as that. 3 different swing highs you could have faded there into this area. Again, looking for lower targets, which we did not get. But again, just like on the upside, feed the ducks, as my buddy says. Feed the ducks. Pay yourself a bit as the market makes profits available to you, aka scale out of some. Almost all of the best traders at S&B in general, whether that's on the equities, futures, options, they typically pay themselves a bit when they start to get a nice move in their favor. So a day where there was some decent profits, but nothing that we really crushed. But hey, a couple 6-point scale outs in the S&P, that's not a bad day. Not a bad day at all. So that's, ladies and gentlemen, what I saw on the day from start to finish, from hypos before the market opens up until opportunities we saw throughout the session. We'll see y'all next time.